The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 16th, terrific Tuesday, Hour 2 edition of the Trader's Edge. I'm Steve Rhodes, and hope that you're off to just a terrific start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary day. And let's always remember, what's talked about is a dream. What's envisioned is exciting. What's planned becomes possible. But folks, what is scheduled, that is reality. And I want to thank you for scheduling your time with me here. I am here to serve you. That means all you got to do is pick up that phone. Give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, somebody else has that exact same question. So don't call in for me. Don't call in for yourself. Instead, a random act of kindness. Because that, folks, that is the way to live. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow up 36 points, trading out at 17,144. S&P down 6, trade at 1983. Composite off 27 points, trading at 45.77. The Russell 2000 to the upside out there. Something to think about. She's trading up $3 at 11.43. The DAX up 18. The FTSE up 22. Gold is back $3 right now. Silver back 43 cents. Light sweet crude off $1. Lead the charge, the upside. You've got Salix Pharmaceuticals up $9. Pioneer Natural Resource up $4.67. CVS Health Corp up $3. Boeing up $2.48. Rand Gold up $2.50. You've got Talisman Energy up $2.40. To the downside, Priceline, PCLN off $27. Mohawk down $7. Tesla off $6. Amazon down about $6. Google off about $6. Whirlpool off $4. That's about it to the downside. Okay, so where do we begin our morning here? Let's just pick up a little bit from where we talked about in the first hour what's going on. So we're going to take a look at, so I'll do this. I'll try to run through this quickly, but just so I can give you a good feel. First, we're going to take a look at the futures contract here for the S&P. So let's take a look at the daily. Let's go start with the ES Mini. That's going to be the easiest thing for us to take a look at. What do we know about the S&P futures? Number one, they've made a 0.382 retracement. That 0.382 retracement coming off the low from October 15th to the high that was put in out here on December the 5th. The 0.382 level, 1977, and some change. You're trading at 1982. What does that mean? Well, look. If the ES Mini is able to form a bullish engulfing candle today, that means closing above the open of yesterday or closing at the open of yesterday, 1998.75 at a 0.382 retracement, you will have seen a bullish reversal signal. Does that mean the bottom is in? No. But what is Stevie looking for? Stevie's been looking for another significant bottom in this uptrend that we're in, and which was supposed to form on Friday. Whether it forms yesterday, today, couldn't be yesterday, today, tomorrow, it's really within the range out there. So that's something that we want to pay attention to. If this level fails, 1977, our expectations should be the price will move down to about the 1914 level. That's your 0.618 retracement. We then went over, we started taking a look at the 30-minute, the 120-minute time frame charts. We'll look at both. We're going to take a look at the 30-minute chart here. What was this doing? This was making a move lower with less weakness. The move lower that I'm referring to is the one that took place yesterday at 12 noon, and then the one that took place here this morning at 7:30. Price moved lower. Did it with less conviction behind that move. Formed a bullish reversal signal, a morning star. That's a 3-candle. Doesn't have to be 3 candles. It could be 4, 5, 6, but in this case it was a minimum of 3-candle reversal formation. We saw that take place. That says that support is the low of that session that came in at 7:30 this morning, 1968.25. If that gets taken out, prices move lower. Wow, I guess I had to go to school for that, huh? That's what it would really mean. That says that, okay, that probably brings into play that 0.618 retracement level. Nonetheless, we get a reversal signal. Did we get much? We didn't get really any follow-through, but we didn't degrade that entire signal during that session coming in at 9 o'clock. We get a second high-wave candle here within the past couple hours. High-wave candles mean that the market has lost its way. This is a market moving to the downside. The 30-minute chart keeps showing us that the market is losing its way out here. That could say, okay, price is going to move to the upside. We've seen at least a short-term bottom. Is that the case? I don't know the answer to that. Yes, I'm still using December. If we take a look at the 120-minute chart out here, let's switch over. Take a look at the 120-minute chart here for the ES mini. Let's go take a look at it. Take a look at the trend line out here. The trend line. This is just a short-term trend line, but we've looked at trend lines in the euro. We've looked at trend lines in gold. These are important lines for us to go ahead and take a look at. If we take a look at this trend line right here from the top of the session at between 12 and 2 on December the 11th. That came in at a price point of, what is that price point? I got to turn that button on my screen here. There's my data window. That was the high there was 2,056.50. If we take a look at the next touch point, it's going to be the December 15th high. That took place between 8 and 10. That's at 2019. We can see that price here earlier this morning at 4 o'clock. Price got, in essence, up into that trend. That's a pretty good trend. So the 30-minute chart says, hey, it's trying to go ahead and at least bounce. We'll know if it's more than a bounce, in my opinion, if we see a move above that trend line. What I would also say is that at the price point of 1998.75, which is just slightly above where that trend is at, that's what you would need to see. If you see a close above that, if you're short the market, please make sure that you have adjusted your stops. Why? Because the message there is that you could see a much larger bounce than you might anticipate. Doesn't say you have to close out the short, but it would say please make sure that you are using a stop. That's what's going on inside of the S&P futures contract, taking a look at the daily, taking a look at a 30-minute chart, taking a look at a 120-minute time frame chart. Now let's switch over and take a look at what's going on inside of gold and silver real quickly. Inside of gold, trade out at 12.04, down $3. What's that? Seems like no big deal. Wrong, Tonto. Or the Lone Ranger, or whoever. It is a big deal because being off by that $3 gets us right back down below that trend line. This trend line here inside of gold is the one from the high on August the 14th. A little bit shorter term trend, but it's a really good trend. Why do I say that? Because your next touch point is the high from October 21st, and that takes us right into that wide-ranging bar, that short covering rally that began on December the 1st, that wild day. Price ran right into that. Now, price has broken above that trend line. That should be a real break. Coming back and testing it like it did yesterday is okay. It's somewhat cool. Sometimes it's not so cool. In any event, it did what it was supposed to do, and it held that trend line. Then overnight, we saw a push lower. As we came into the early morning trade time frame of about 8:30, 9 o'clock, 8 o'clock, we saw price move above that level. What has it done so far? This is with the U.S. dollar index getting whacked this morning, meaning it's moving lower, and gold is not finding its legs out here. Why is that? I don't know. I've got some theories. We don't even need to know the theories. Here's the reality. The difference between theory and reality. If gold closes below that yellow trend line out there, it is not good. The message that it carries with it is that it was a false break to the upside out there. And that actually is more bearish than it is bullish. At any point in time, price can do whatever in the heck that it wants to do. I can't control that. What I can tell you is that would not be a good thing for the bulls in gold out there. So that's an important trend line to watch. What's the other trend line out here? Well, it's really with regard to the euro. With regard to the euro is moving to the upside out here. So let's not correlate one with the other, even though there is a correlation there. You would think there's a correlation. There has been a correlation. It doesn't always have to exist out there. If we take a look at the trend line inside the euro coming off of its October 15th high. Plenty of touch points on the way down. We know that the euro, at least from a short-term basis, has broken its trend. What does that say? That says we ought to see the U.S. dollar index trade lower. What's the U.S. dollar index doing? It's off 612 or so ticks right now. Where's the U.S. dollar index headed to? Well, it's going to head down at least into this little support-ish type area right around the lows from November the 6th out here. That probably takes us right here into the October 3rd-ish type level right around the high of 87.03. Is that a big deal for the U.S. dollar index? Here's the deal. If we go take a look at the correlation between the U.S. dollar index and the commodities, and the correlation between the U.S. dollar index and light sweet crude, I say you just throw that the heck out of the door. Don't even be paying attention to it. Light sweet crude and crude oil's got its own thing going on. It's got its own pity party that is going on. That pity party could be going on for quite some time out there. But with regard to gold and silver, this will be an important and an interesting trading session. Nonetheless, we see that mining equities are moving to the upside. They moved to the downside yesterday with gold. Let's go take a look at a couple of them. Let's look at Rand Gold. GOLD is the ticker symbol. You can see how that traded down lower yesterday. So far today, a little bit of a gap up. What do I mean about a gap up? I don't mean the gap that you're normally used to seeing, but when I take a look at the price where it closed yesterday versus where it's open today, which is an inside bar out here. Let me get rid of that A to B equals CD because that is most certainly not the pattern out here. If we take a look at retracements now from low to high, meaning the October 31st low up to the high out here on November 25th, we'll see yesterday price got to the 0.786 retracement. An inside bar today. Rand Gold, even though it looks pretty good, what does it have to do? It's got to get above that high from yesterday of 64.48. If it doesn't, it's an inside bar, even though it was a gap up from yesterday's close, so to speak. An inside bar says the trend that it came from would continue. In this case here, that trend, by the way, over the last several days has been trending down. That's the meaning of an inside bar. Let's go take a look at Gold Corp. What is the meaning behind Gold Corp today? GG is the ticker symbol. She's up 31 cents. It, too, with a slight little gap up. But the reality is, what has Gold Corp got going on? It's, number one, an inside bar. Number two, in order to really change its trend, it's got to close that window. It's got to repair that window. And that's the window from the gap down on the trading session of October the 30th. That is $21.42. She's at $17.71 right now. That's what's going on inside of Gold Corp. Let's go take a look at Barrick Gold. ABX is the ticker symbol. What has it got? Same pattern here. Yes, it gapped up with regard to yesterday's close, but not really doing a whole heck of a lot. Had a request to go take a look at IBM, I believe. Let's go take a look at IBM. Let's go see what she is doing as we speak right now. A green candle. Is that a bullish candle? Absolutely not. It most certainly is not. Let me see here. There we go. IBM yesterday moving lower with volume of about 6.5 million. The day before 8.6 million. Today it's traded 1.5 million. What is IBM doing? I think we've got to look to the longer term charts to figure that out. So let's go take a look at a monthly chart for IBM. What is IBM trading into? Is there a swing point it's trading into? And the answer there is no, not really. But let's go take a look at, which means no, on the monthly basis. But if we look at retracements from low, meaning the November 2008 low, all the way up to the high that was put in here in March of 2013, IBM a little bit weaker than the Dow, meaning that IBM is below the 0.382 retracement level, 159.98. Unless IBM gets above that level, IBM is more prone to making a move down to the 0.618 retracement, and that is at 125.42. A quick peek back at the ES Mini on the 30-minute chart out here. We can see that the market here that gave us that bullish reversal, moving lower with less relative weakness out there, that nice divergent pattern out here, giving us a bullish signal, giving us a couple of messages that the high wave candles tell us the market had lost its way to the downside. We're now seeing it move to the upside. Remember, that level that we want to be paying attention to today, 1998.75. If we see a close above that, I'm telling you, it's possible that bottom could be in. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Okay, we got the Dow up 31 points, S&P up 3, Composite down 14, Russell's up 4 out there. Let's go take a look at some longer term charts out here. So we looked at the daily chart for the ES-Mini. We know it made the 0.382 retracement. We took a look at really all of the indices out there. We looked at the 30-minute chart. We know that Stevie has been calling for a bottom to form. Thought it would form on Friday. Maybe that bottom was actually taking place this morning and yesterday. So now let's go take a look at a longer-term chart out here. We're going to look at the Dow. We'll start off with the Dow. Now, as I put the Dow chart on my screen, as each of us should do when we begin to take a look at a chart, always best to start taking a look at a fresh chart out there. I mean, in a blank chart like this, of course, when we take a look at blank charts like this, they really don't have a lot of meaning. Over the course of the last several months, you've seen me use a tool called the horizontal trading ranges. It's work that initially was produced and developed, as you know, by Bud Rolfs out there. I've gone ahead and I've modified that because I just simply have more data, more information that's available to us, because what we're looking at is horizontal lines of support and resistance. Now, those horizontal lines of support and resistance, resistance. In this case here, they're going to be a little bit different from a monthly than they will from a weekly, than they will from a daily, than they will from an intraday chart. That is a different idea and a different concept and a different tool than what Bud had created out there. Why am I able to do that? Because I've been able to automate this. And in the next segment, we're going to have the author of the automation expert behind this. But if you watch me, we've got a weekly chart on my screen out here for the Dow. And I'm going to go ahead and decorate that chart by just simply turning that tool on. The solid green lines that you see on my screen out here, those solid green lines are significant areas of support and resistance. They are significant areas. Now, if we take a look at what did the Dow do yesterday, the Dow got down. The actual price of the Dow yesterday got down to 17,081.49, closed at 17,211. The actual boundary line, the support level, which has now been tested, 17,163. If this week we see the Dow close above 17,163, it can be 17,160, it can be 17,164, whatever. This is not about being exact. This is not about perfection. This is about using it as a good guideline. And if you look at my chart here, you can see how price travels within these areas. If I want to go ahead and close off the midpoint out here, I'll go ahead and do that just so you can see the real trading range boundary. Oops, I thought I closed it off. There we go. I'll close it off right there. There we go. So now we're just taking a look at the areas when price gets above one trend line. These are horizontal trend lines. Price will tend to gravitate up to the next. When price comes back, just to verify that it's a real break, and this is what we're paying attention to, that 17,163. If this level holds, then what price ought to do is go gravitate up towards the swing point high, as well as get up into that 18,281. That is my expectation, is that it goes up into that 17,281. What else do we know by taking a look at this chart? Well, one of the things that we know is that the trend that took place back here in October of 2011, that is still in place. We are still in an uptrending market. Why do you buy the dips? Because we're still in an uptrending market. Has the trend changed? I don't know. I don't think so. At this stage here, if we see a break of that trend line, then maybe so. Then we'll see price move down to 16,045. At this stage of the game, what do we know? The uptrend is in place. We also know that price moved down and it has tested a weekly support level. We're only at Tuesday. Can it bust through there? It most certainly can. Now, that's what's going on inside. That's what's going on inside of the Dow. Let's go take a look at what's going on inside of the S&P 500. We took a look at the ES Mini. We focused on that in order to be able to provide us with some information about what is happening inside the market. Inside the ES Mini, here's the weekly chart. Now, in the case of the weekly chart, price broke above its horizontal resistance level. That was at 2028. We're trading right now at 1993 inside the S&P 500. When it comes to this week, it's important for it to get above 2028, 27, 29, somewhere right around there. If, in fact, that level holds as resistance, then we're going to have a Dow and an S&P that are not congruent with each other, meaning they're not both doing the same thing. What do we know about the S&P 500? It has not broken its trend line, the one that takes us back into October of 2011. We know that that's an important trend line. Why? Because in the month of October, as price came cascading down on its weekly chart inside the S&P 500, it found support where? Right at that trend line. What else did it do? It formed a hammer candle. That's an important bottoming feature. What did it do the following week? Big old bullish engulfing session out there. That says that that bottom is important. What else was going on at that bottom? A horizontal support level. If, in fact, the S&P gets above 2028, she's going to run to the 2211 area. But you know, the long-term price target for the S&P is 2350. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 13 points. She's trading at 17,193. S&P is up a point. The NASDAQ composite off 18. Russell's up 2. Gold back $10 right now. Silver back 70 pennies. And as most of you folks know, one of my real passions in life is, and the thing that I love to do most is to really figure out what these stock markets are doing, what the charts are communicating to us, to step back each day and take a look at a clean palette and then go ahead and add our artwork, the different tools that we use to help us identify what a stock, what a currency, what a commodity index, whatever it's doing. What you've learned over time is that when we take all these tools here and we apply them to the charts, doesn't matter what it is that we're trading. We're agnostic with regard to what it's trading. We're agnostic with regard to what direction things are going. We just simply go ahead and apply those tools. Now, what I learned a long time ago, there was a quote by Pablo Picasso. He coined this quote, I believe, and he said the following. He said, good artists, they copy. and great artists steal. So what does that mean? Well, what it means to me and how I apply this to trading is that great artists, they see patterns that the original artist didn't see. And therefore, in order to be a great artist or great technician out there, all that we need to do is take the great works of others and just simply make it better. It's the way that it works for everything in life. You know, we've gone from seatbelts, right? We've gone from seatbelts to airbags. One day we're going to have cars driving for us. We've gone from counting on our fingers to the abacus, to the calculator, you know, to an app that's on your phone out there. So when I began my quest to start adding artwork to charts, I realized that in order to be able to take my technical trading and strategies and make them better, I really needed to be a programmer, which I'm not. So that meant I had to go out and I had to go find my Pablo Picassos out there. And folks, I want to introduce you to a great artist, a great Pablo Picasso, a great programmer when it comes to e-signal trading applications. It is the founder of Traders Formula Consulting. I've got the webpage up on my system. If you utilize e-signal platform, then come on over to their website. You got to take a look at it. And Jason Keck, welcome to the show. How you doing today?
I'm good. Thank you very much.
That's great. And, folks, Jason does some extraordinary work out there, and some of that work is a new way of thinking with regard to different technical indicators, different tools that he's been able to build to take the work of folks that have done great things but only make them better. So, can you explain a little about this unique concept that you have developed, how you got there, that whole process for us?
Yeah, sure, absolutely. You know, I was a former member of the eSignal product management team, as you know.
Yes.
And while I was with the company, there was always clients calling in and, asking the company for custom development. But eSignal, they don't provide development resources for the customers to do these things. So the only thing they could really do was refer them out to consultants.
Right.
And so, they would have to pay a consultant an hourly wage or a fixed price for those projects, which could be fairly expensive.
Yes.
So a lot of customers just they wouldn't go that route because they didn't want to spend hundreds or thousands of dollars for a single project to be developed. So I started kind of incubating this idea for what's now we call the Traders Formula Co-op, which is essentially a subscription-based custom development service. So all of the members pay a monthly fee, a low monthly fee, $30 a month.
Yes.
And they essentially can request custom development, and they agree to allow everybody that's in the group, all the members of the co-op, to use all the formulas that we develop. So everything that we develop goes into this library, and all members can use it for $30 a month. So the real benefit of this is that we can now do some much more advanced projects that may never have come to life before, because in a traditional consulting relationship, the developer wants to know, what are the requirements, because they want to be able to estimate their time and manage their time and manage their hourly wage, right? But many customers they can't really give you the exact requirements from beginning to end of what they want. There needs to be some iterative process, some exploration, and some enhancements as you test it and come up with new ideas.
Yeah, because as you go along, I mean, you're dealing with all the stuff that you've done maybe by paper trading, by trying to track every trade. You get things automated, and then all of a sudden you see things that you didn't see the first time around.
Exactly. Things need to evolve. And once you have something in your hands and you're testing it, it generates new ideas and new enhancements. So in the traditional consulting relationship, this gets really expensive.
Yes.
So the idea behind this co-op is that we're willing to put as much time as we want into this project and inject some of our own ideas and enhancements to work with the customer to create something of greater value while saving them money at the same time.
Yeah, no question. And just as an example, folks, Jason, when we developed our eSignal relationship, the idea was, look, if I was going to improve the eSignal charts, at least for what it is that I communicate to each of you out there, what I wanted to do is I wanted to have some of the tools that I have used in the past that work really well for me. And then it was, hey, what additional tools? So that's how I ended up getting in touch with Jason. And so in the prior segment, we took a look at these horizontal trading ranges. And the idea to be able to automate them, to be able to take any chart and immediately go ahead, folks, and put them on the screen. And so as we were developing this system out here, we identified our what we'll call our primary horizontal trading range boundary lines, the areas where we had the largest number of co-located opens and closes. And that just simply gave us our range, and that just simply we added to each range to figure out what the horizontal price levels were. What we also identified when we started taking a look at things on an intraday time period was that we needed to be able to, when we were taking a look for our midpoints as an example, and I'll put the tool up on the screen, folks, so that you can actually see this here, and here's some of the work that Jason has done, so I can change the colors for daily, intraday bar charts. But whereas the traditional thought was when you create these primary ranges, that your midpoint becomes your halfway point, we identified that, hey, there's a benefit in some instances, depending on the time frame chart that you're using, that you might want to break that into quarters or eighths, especially if you're using futures contracts or currency contracts where you've got a lot of activity, that maybe you've got flat type trading sessions, and you can modify hours and things of that sort. But like Jason is saying, this wasn't anything that we anticipated really going into it. So if you've ever developed a software tool or you've been using an existing tool out there and you see a different pattern that's in place, I know what the cost. I personally know what the cost of building those tools is. And just as you say, Jason, you end up getting into it. You find out, hey, now that I've got this cool tool, hey, I didn't see that, so can we do that too? And of course, on the programming side, it's yeah, sure we can, but it's just going to cost you.
Right, but not in this case,
That's right. Yeah. Yeah. So, which is really cool, folks, because you've got this cooperative, right? Co-op is a cooperative program, and so the members get a benefit for it. Which is really
a perfect example of this type of project.
Yeah, no, absolutely. So tell us about some of the other projects that you're working on. And first, how do people get in touch with you?
Well, they can go to our website, tradersformuaconsulting.com.
Okay.
And they can contact us through that site. And there's also links there to sign up for the service, which is it's an eSignal add-on service, by the way. So eSignal manages the collection and billing and everything. It's all handled through the your eSignal account. Mm-hmm, mm-hmm. So you'll see the link on the main page there.
And you've been creating programs within eSignal for how long? How many years would you say?
Well, I was with the company for over 10 years, and I started out as a support specialist for the language for a number of years, and then I was the product owner for the language for a number of years. So yeah, I've got 10 plus years experience working with this language, and my partner, my co-founder in the company is Chris Kreisa from Divergent Software, mm-hmm. who's also been he's been a consultant for eSignal development for over 10 years as well, and he's probably by far the most sought after consultant that there's been. And so mm-hmm. the two of us together are there's pretty much nothing we can't accomplish with this language.
And what folks, if you go over to Jason's website, Traders Formula Consulting, what you're going to see on the right-hand side, you're going to see this co-op library of a bunch of tools out here, and these are all tools that you can get these tools in their standard way. In many cases on some of the applications. But what these tools that show up on here, these are the modified tools. We're coming from experienced traders that have identified patterns out there that you're not going to be able to pick up just by using the traditional tool out there, which is really cool. And you've got a library of 15, 20 at least out here.
There's about almost 100 formulas in there currently.
100?
Yeah, like 15 or 20 different categories.
Yes. Yeah, right. And what are some of the current projects that you have ongoing right now?
Well, right now,
I guess one of the things we talked about,
progress page.
Yeah, one of the things we talked
people to go and see, what we're currently working on or what's coming up. We're working on some, dual moving average crossover formulas and some trading range breakout strategies. We just recently completed one of the formulas that you've been using, I believe, on your show a couple of times, the
yes.
multi-time frame stochastic
Yeah,
alerts.
let me put that up because we got a lot of folks that that utilize stochastic crossover, MACD crossover. So I've got as an example, I've got the ES Mini chart up on my screen, and I've got this as the 3 time frames, like you said, a multi time frame chart, and the time frame for this chart is a 300-minute chart for the ES Mini, but the time frame. So I've got this little dashboard in the lower left, folks, if you're watching this on Tiger TV, and it also shows you exactly what's going on for the ES Mini, for the December contract, for the daily and for the weekly with regard to what's going on with the stochastics, as well as the MACD for the 300 and the daily. So explain to our listeners here and our viewers what it is that they're looking at.
Well, this view that you're looking at is this dashboard view, right? So we have it's just another way that we come up with for viewing multi-time frame information. Because if you change this view, change the view back to indicator lines, for example.
So go back here. So I'm going to come back here to the chart, folks, and I'm going to just simply come into this time frame tool. And so I've got the ability to show it as a dashboard, which is what you're looking at in the lower left, or these indicator lines, which is what shows up right now.
Right. So when people are looking at the real-time bar, it can be hard to see the relationship of all those indicator lines and to see where they're at, because they're all kind of overlapping each other.
Right.
So the dashboard view gives you that real-time view, so you can see the values, and we've color-coded those columns so you can see what the relationship is or how they're crossed, and to help make identify your trading signals in that way. In this particular study, the client that came to us with this, he has a particular set of color coding for the price bars to also match what is happening with the relationship between the different time frames. So when he sees these light blue bars, this is where he starts looking for long entries and crossing up. And he also, on the bottom of the screen there, you see the 2 rows of dots that are colored red and green.
Yes.
These represent the cross relationship for the 2 time frames of the MACD.
Which in this case here,
he uses these just as confirmation for staying in the trade. So if they're, once he goes long and he sees these starting to turn red, that's when he starts looking for the potential exit.
So folks, so you've got that view, you've got this dashboard view, and and what you can do here, if you take a look at this is the parameters tool inside each of the applications that you would be running. You can see here we've got these time intervals just listed as interval 1, interval 2, interval 3. So you can go ahead and place whichever time frames it is that you're working on. So as an example, folks, if you were an intraday trader and you wanted to use, let's say you were using a 5-minute chart out here, you can have a look at the 5-minute, the 10-minute, the 30-minute from the stochastics, and you can do the same thing with the MACD. You've got 2 MACD levels out here, and they're going to give you, your live feed information. Again, these candles are color coded to match the system that has been developed. So you're not going to be looking at red or just your traditional red or green candles, but you can actually do that off to the side as well. So I think, and you can have all these. If you take a look at this, folks, here. So here's the ES Mini, and I've got even though it's all scrunched a little bit, I could change this here, so from the dashboard view, I've got a 5, a 10, a 30, a 120, a 240, the daily. So in one instant, you can see exactly what's going on. And Jason, explain to them, because I think the other real cool feature of what you built here is the watch list. And watch lists, are those
another really interesting thing that a lot of customers are requesting is watch list versions of these studies, because they have a large list of symbols. They want to look for particular conditions, with a study like this multi-time frame stochastic. So we've designed the studies so that you can run them in either the chart or the watch list. So when you have it applied to your watch list, you can see we put different outputs for these columns. So these are showing the cross relationship between each of the multi-time frame stochastics. So when it's negative, it's crossed, the fastest is below the slow, etc. Right?
Yep.
So
Absolutely.
The other thing that you can do now with the watch list is you can use auto sorting to bring certain symbols to the top based on any one or combination of these columns. So if you're looking for something that's in a very negative, cross situation, you can bring those to the top of your list, link your watch list to your chart, and bring those up and look for your trades.
Sure, Jason, stay with us. You come back from this break here. We'll just finish off taking a look at this watch list, folks.
Sure.
Stay with us right now. We've got the Dow. She is trading up about 26 points. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 55. S&P is up 4. Composite struggling this morning. She's down 12 points right now. The Russell is up 5 points. And in that last break, we were speaking with Jason Keck. He is a co-founder of Traders Formula Consulting, who's created this extraordinary set of a system in order to be able, really a cooperative formulas to be able to be applied to special tools that you might use that the original artist really didn't see out there. So, Jason, again, thanks so much for spending time with us this morning and introducing your product and your services to all the TFNN Tigers and Tigresses. Is there a way? I mean, they can come over to your website. Is there a way that they can test drive this service? Hello, Jason? Uh-oh.
Oops, sorry, I had to unmute.
Got it.
Thanks again for having me on your show. It's been really good talking with you and getting to know you.
Thanks.
But yeah, as far as trying out our formulas, the first 30 days of the subscription is free, so you can add the service to your eSignal account and you can try everything in there for free for 30 days.
Great. So, folks, if you want to try these horizontal trading range boundary lines, they work on all charts, all time frames, intraday. Come on over to the website, give that a shot, as well as the multi-time frame stochastic and MACD crossover. Very cool tools out there amongst the 100, as Jason says, that he's got access for you to take a look at. So, Jason, thanks so much for spending time with us. Thanks for all the good work, and look forward to speaking to you again soon.
Same here. Thank you very much.
You bet. Have a great day.
Too.
All right, folks, the Dow's up 77 points right now, so let's go take a look at what it is that we know and the areas and things that we're looking for. So I'm going to go back to this 120-minute time frame chart here for the S&P. So we identified this little short-term trend, and price has made its way up to that level right now. That's a trend coming off of the high out here on December the 11th. That price point was at 2,056.50. Our next touch point out here is going to be that 2007 level. So there's our little descending trend line out here. We can see that price has now come up to this magic level that's really not so magic. It is actually magical, that's for sure. That's 1998.75. The actual intersession high that we've seen is 1998.25. If we see price close above this, again, this is a 2-hour chart. This doesn't end until noon, so it's not until Basil's show is done. But when Basil's show is done, if you see a move above 1998.75, a close above 1998.75, I'm not talking 1999, something of more significance. What you're seeing is you're at least seeing a short-term change in trend. But you could be seeing something more than that. How would we know if we may be seeing something more than that? Well, if you go over and take a look at the daily chart, any close above yesterday's open inside the ES Mini, and that's at 1998.75. How about that? Then you'd have a bull sash, a bullish engulfing type candle after only making that 0.382 retracement. Where are we at in the summation index for the New York Stock Exchange? Let's go take a look at that. As we take a look at this, this has made the 0.618 retracement. It too would form a bullish candle if it closed above 10,535. The summation index still ticking down. Price oscillator has turned up. Let's go check out the VIX index here. I showed you this tool here yesterday. At this stage, the VIX index is still above that 50-day Bollinger Band reading. This is with a 1 standard deviation out here. If we see the VIX today, which it is not done yet, if we see the VIX today close below 1976, not 1975, but somewhere well below 1976, price will have gotten back inside this band. What happens then? Go check it out yourself. Whenever the VIX gets back inside that band, it usually moves to the bottom of that band, and that is where you start to see markets form bottoms out there. So those are the things to keep your eye on. Of course, keep your eye on TFNN all day. Our man Basil Chapman is up next. After Basil, it is Tuesday. That means we got the Options Hour. Then Daryl Martin, David White, the Tom O'Brien Show from 3 to 5, and, of course, our man Andy Heck to wind things down for us. Have a terrific Tuesday, folks. Don't forget, get over to Traders Formula Consulting. Go check out all the great tools over there. You can test drive that for the next 30 days. Have a great Tuesday. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.